This question's for Charlie. It comes from Stephen Tedder in Atlanta. He's been a Berkshire shareholder for 10 years and says, you and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008 and is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party, and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty, we're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism and said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
In that list of the 20 most valuable companies, just 3 are Chinese. Now, if you're looking out 30 years, how many do you think will be Chinese? My guess is more, but I don't think they'll top the United States. But who knows? It's amazing what has been accomplished, and
really amazing.
And they found what works. I mean, there's nothing like finding something that works in order to sort of reinforce ideas over time, and we'll see what happens. But I would bet there will be more than 3, but I will bet the United States has more than China has too.
Hey guys, welcome back. In today's video, we're going to be looking at what has caused a lot of these big Chinese companies to be sold off so heavily in this last week or so. Is this just bad news, or has something fundamentally changed with a lot of these companies? We're also going to be looking at how the best investors in the game, such as Warren Buffett and Charlie Munger, deal with this in their own portfolios and look at ways that we can sort of implement different strategies into our own investing to help sort of mitigate a lot of these problems that we're facing on a day-to-day basis when it comes to a lot of bad news and bad sentiment that's come out there in the market, and which could quite affect a lot of companies that you may be invested in. You've got to remember why you invested in the company initially, and has something fundamentally changed there as well. And in the end, I'm going to give my take on what I'm currently doing with a couple of Chinese companies that I'm currently holding, whether I'm buying more or selling. So make sure you stick around for that. But if you do enjoy today's video, guys, it'd be much appreciated if you hit that like button. Helps me out a ton, helps push these videos out a bit further. And if you'd like to see future videos, make sure you hit that subscribe button. That way you can stay up to date when the next video drops. All right, guys, with that out of the way, let's jump into today's video. All right, guys, we're going to be looking at a couple of different articles here today. Firstly, we're going to be looking at investors.com. This is one of the better articles I could find about what's driving the sell-off of a lot of these different Chinese companies. Secondly, we're going to look at Cathie Wood, who is the CEO of ARK Invest, if you're unfamiliar with Cathie Wood, and see what she's been doing with a lot of these recent sort of sell-offs across a lot of these different Chinese companies. And then lastly, we're going to look at some timeless advice from none other than Warren Buffett around what he does in these sort of situations. And lastly, I'll share my 2 cents on what I've been doing recently when it comes to a lot of these sell-offs and what I've personally been doing in my own portfolio as well. So make sure you stick around for that. So let's just quickly dive in and have a quick look at what's been driving this sell-off over this last sort of week or so. Look, I only have a basic understanding of this. I've read a few different articles, watched a couple of different videos about what's actually caused a lot of the sell-off over the last week. But what it all boils down to basically is the Chinese Communist Party is really sort of flexing their muscles over a couple of different sort of educational companies out of China at the moment. which in turn has caused a lot of sort of bad news and bad sentiment out there in the market across all Chinese companies. They're sort of getting all lumped in onto this thing, I feel. And I think a lot of the hedge funds are worried, look, this is what they can do to these educational companies. What can they do to Alibaba or JD.com and maybe potentially these other Chinese companies out there, Tencent as well? And they fear that they could do similar sort of things. But these sort of things also happen in the US as well. It's not only purely this sort of thing that goes on in China. So you've got to remember that as well. You get a lot of these sort of similar things that are going on with Facebook at the moment in the US. Anyway, let's jump in and have a quick look over some of the key highlights from this article here. So China stocks sold off hard on Friday after Beijing cracked down on education stocks like TAL Education, TAL, and the new Oriental Education, EDU. Both stocks were down more than 50% after Beijing banned foreign investment in education firms, and education firms were also banned from raising capital through stock offerings. Look, if you're a shareholder with these two particular companies, this is quite bad news. Myself personally, I'm not a shareholder with these companies, and I don't really know much about these companies, to be honest. So they're not companies I've looked at all in great detail at all, to be honest. So I can't have any input on them at all, really. But like I said earlier, I feel as though a lot of these Chinese companies are all getting sort of flagged under their one umbrella. All bad news and bad sentiment, let's sell it off. And all these hedge funds are just sort of exiting out of a lot of the Chinese offerings that they had on their books. I'm just going to look at a couple of different key things here on this article. So Alibaba also, we all know about the fine that they got fined with earlier in the year around April 12th after China regulators fined the company $2.8 billion after anti-monopoly probe. This is, I mean, $2.8 billion is a lot of money, but to be honest, to Alibaba, it's still quite small. For you and me, it's a game over change sort of thing, but to these big sort of e-commerce giants like Alibaba, it's still quite a small sort of dent, let's say. But I think they would definitely feel it, but it's just a little reminder, I think, from the Communist Party who actually is the boss. So that's a quick touch on that. Another thing to keep an eye out for, what's coming up on August 3rd, is the latest earnings report from Alibaba. And they've got here that the Zacks consensus estimate is for adjusted profit of $2.14 a share. That's up 2% from the year ago quarter, with revenue up 51% to $32.9 billion. So I'll be watching this closely, sort of see what comes out from this latest earnings report from Alibaba. Be interesting to see how it sort of reflects in the share price as well. I'm going to be leaving the link to this in the description below if you guys want to dig through this as well. Just goes on more about the strong results Alibaba's had over the last few years, the recent sell-off here, the fundamentals of Alibaba, how they are quite a strong company. If you look at, so it's hard to find a company with a more impressive track record of growth than Alibaba. The company has 5-year annualized earnings growth of rate of 29% and a sales growth rate of 46%. So these numbers are huge. You don't see this at all really on any companies, to be honest. Expectations were high for Alibaba's Singles Day annual shopping event in November. China's biggest shopping day. The company didn't disappoint as sales nearly doubled from the year ago prior period to $74 billion. So basically, guys, that's what this whole article sort of sums that up. Like I said, I'll leave a link to this in the description below. So that's it from there. Let's jump over and have a quick look at what Cathie Wood's been doing. So, old Cathie Wood here. Cathie Wood's ARK Innovation ETF has sold nearly all its Chinese stocks. This I found quite interesting. Look, I have a lot of respect for Cathie. She has achieved amazing returns. She's far beat me on what the performance of my portfolio personally. But I just can't fathom and wrap my head around why she'd be selling off a lot of these sort of Chinese companies over this last week or so, when they're at sort of, they could still keep going lower. Nobody knows. I don't personally know. The price may keep going lower. But she was happy to be paying, sort of that mid 200s for a lot of these companies like Alibaba and JD.com and whatever other companies that she was buying into. And then here she is this last week when prices are at all-time lows. The sky's falling. It's the worst time ever. And here she is selling off a lot of her positions within a lot of these different Chinese companies, which I personally can't sort of wrap my head around. Is she just sort of, following the crowd and sort of, I've got to get out of these positions just because she doesn't want to upset her investors because there's a lot of negative news and a lot of negative sentiment out there at the moment around these Chinese companies, possibly? I'm not too sure. Look, I don't know enough about it, but I definitely find it interesting that she has been sort of selling off recently over this last week. She's pretty much sold out of most of her Chinese holdings from what I can gather. And that's what this article sort of touches on. I'm not really going to go into great detail on this article, but like I said, I'll leave a link in the description below if you want to check it out a bit more. If you have a bit more insight around this, or you follow Cathie Wood, look, personally, I don't follow Cathie Wood too closely as we have very different sort of investing sort of strategies. Then drop it in the comments below what your thoughts are around this big sell-off by old Cathie here. Pretty interesting, I feel. Anyway, let's jump over and have a quick look what old wise Buffett has to say about how he sort of manages these sort of situations. All right, let's check that out.
I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more, and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago, in the annual report, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others. And fear is something I really never felt financially, but I don't think Charlie's felt it either. But some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. I don't know whether it'll work out over 2 years at all. I have no idea whether you'll be ahead or behind on a stock you buy on Monday morning or the market.
There we have it, guys. I'd love to get to know your guys' thoughts and opinions around this. Do you see the sell-off as just a short-term problem, or is this a more of a long-term problem? Has something fundamentally changed with these different sort of Chinese companies? Me personally, I see it as a short-term problem. By no means is this a buy recommendation or anything like that, but I have been adding to my Bubba positions, and I've recently opened a position with JD.com over this last week as well. Like I said, this is not a buy recommendation or anything like that. Make sure you do your own research when it comes to any investing. I'm just saying what I've personally been doing. But the way I'm looking at it at the moment, I feel as though the market has priced these companies with very little room for growth. Whereas if you unpack a little bit under the hood what's in both these sort of companies, there is a potential for a lot of room of growth in these different sort of companies that we've been looking at today. So with that said, we're going to wrap it up there for today's video. If you did get some value from today's video, guys, make sure you hit that like button. Helps me out a ton, helps push these videos out to a wider audience. And if you'd like to see future videos, please consider hitting that subscribe button. That way you can stay up to date when the next video drops. All right, guys, stay safe out there and avoid any of this sort of bad news out there in the market. And we'll catch you in the next video.